Hello, everyone. I'm John, lead analyst and founder of JP Strategic Investments, and today I'm going to walk you through what our process is when we find stocks. Now, obviously, there's a bunch of different ways to invest. There's a lot of ways to find stocks, and so depending on what your strategies are and how you invest, whether you like to look more long term or short term, whether you're more of an investor or a trader, these may not work for you, these may work for you, but we're just going to kind of go through our strategy, how we find stocks, and hopefully you'll find some of it helpful. So, first of all, our strategy is more of a long-term strategy. We tend to look, maybe 3 to 5 years out, sometimes a little shorter than that, but we are more looking at the companies and how the companies will grow. We tend to focus more on the fundamentals of the company rather than just trading short-term trends and things like that. So just to kind of jump into it here, the main way we start looking for stocks is we don't actually look for the companies. We actually like to look for different trends and different industries or products or services that we think will show a lot of growth over the next maybe 3 to 5 years. And then we look at which companies are poised to benefit the most from those trends. So, for example, one of our investments is Skyworks Solutions, right? And what Skyworks Solutions does is they basically manufacture chips and other components for all sorts of devices that need connection to Wi-Fi or data or even connection to each other, right? And so the way we found that company is basically we were looking, for trends like we were saying, and we see that, you know, 5G coming out obviously is a huge thing. We did a lot of research into that. And then also the Internet of Things. So the Internet of Things, if you guys don't know, is basically all of these devices that are connecting to each other, like the smart home type of things. All of that is part of the Internet of Things, right? When you can say, "Hey Alexa, turn on the lights," right? If your smart thermostat talks to, your AC and it can sense all of these things and all of those interconnected devices, we think that that is a trend that's going to grow exponentially in the future. And so smart home devices, we see that as a huge growth trend. And so because we see 5G and we see smart home devices and the Internet of Things as a trend that's going to grow, then we look at the companies that we think will benefit the most from that. And so based on the research that we've done, Skyworks Solutions is definitely a company that stands to benefit greatly from the Internet of Things and 5G and the growth vectors that we just talked about. And so then what we'll do is we'll look at those companies like Skyworks Solutions and we say, okay, what are their future plans? And what are the chances that they execute on those future plans, right? So are they going to be able to execute? So then we look at, the company's history, how well it's been able to execute on its previous plans, right? We look at other things like that, the financials, and we'll get into that later. And so then we kind of go from there, right? And so the other thing we also look at is, if they do execute on those plans, if they are able to execute on those plans, where will they be, right? And so that's when we kind of get into the next thing is, so what are their products and services and how can they grow? So, do people want and need the company's products and services? Are the company's products and services better than those of their competitors? This is a huge thing, right? And so, you know, uh, to give you guys another example of another company for this segment, Tesla, right? Tesla is another one of our investments, and so a lot of the debate with Tesla is, right, do people want to buy electric cars? And from what we've seen, electric cars are definitely a trend that's going to continue to grow. And so, do people want and need the company's products and services? From what we've seen, when people drive Teslas, they immediately want Teslas, right? And so that's like a um, huge check mark for us. Seeing that in a company, seeing that love from the customers is a really awesome thing to see in a company. And then the other thing is, are the company's products and services better than those competitors? In Tesla's case, this is definitely the case. you can see their range versus other electric cars is exponentially better, right? The efficiency, their self-driving programs, all of the things like that are the things we look at and we compare those to their competitors. And that's what kind of gives us the confidence to invest in a company when we see that they have those products and services and different aspects of their business that are better than those of their competitors, right? And then finally, do they innovate and invest in their future, right? Because if a company, even if they have better products and services or their business model is better right now, if they're not focusing on making that even better and better and better over time, then other companies are just going to overtake them and take their market share, and they're not going to succeed. So we want to make sure that the companies that we're investing in are innovating and they're investing in their future growth of their products and services and their business. So that's a really big thing for us. We want to make sure that they're doing that. And again, using Tesla as an example, that is definitely the case there. So another thing we look at when it comes to competition and their competitors is kind of the amount of competition that's out there. And so, if there is, even if your products and services are better than your competitors, if there is so much competition that it's just saturating the market and it's not allowing the company who has better products to maybe make more of a profit on their products or services or things like that, then it may not be a good idea to invest in a company. And so, to kind of switch gears here and give you another example, another one of our investments is Uber, right? And we actually weren't invested in this company until recently, kind of because of this reason, right? There's so much competition out there, but they've kind of become now the top player, or at least the top 1 or 2 position as far as their rides business goes in most of the markets that they're in. And so that's something that has definitely given us more confidence to invest in Uber. And also, do they or their competitors have any competitive moats? And so one of the things also, if we look at Uber, because they do have their Eats business, right, and their delivery and things like that, one of the things that they have that the other competitors in that space don't is they have their rides business to lean back on. And so if you're a company that's just focused on food delivery, right, all of your new customers have to be completely new customers, right? Whereas Uber, they have their rides business, and so they can advertise and they can do promotions and they can kind of steal customers, not steal in a way, but also use the customers that they've already acquired from their rides business and kind of use that as a funnel into their Eats business. And so that allows them to much more easily bring in new customers to that platform than the other competitors in that space. Another good example of this, if we go back to Tesla, again, is their battery technology, right? Their battery technology, because it's so much better than that of their competitors, and because, again, they're innovating it and constantly improving it, that allows them that kind of buffer or competitive moat, like we like to say, against competitors kind of taking their market share. This is definitely one of the things that we like to look for in a company because it really helps them stay ahead of their competition. So, once we've figured out that we like the company, we like their business, we like, their products and services, we think they're going to benefit from these trends, we do want to take a look at their financials because obviously if the company's not making profits or not on the path to profitability because of this growth, then the company really doesn't have a future, right? And so we like to take a look at their income statement and see, okay, is revenue growing, right? Are profits growing? Are they doing things efficiently? Are they not spending too much on the administrative costs and things like that? So, are they spending money where they need to and not spending money where they don't need to, right? And then we take a look at the balance sheet, okay? The balance sheet shows how much cash and assets and things like that they have as opposed to how much liabilities and debt. So the main thing we look at on the balance sheet is the ratio of how much cash and investments they have to their debt, right? And so this depends on the company, depends on the industry. Some industries are more debt laden than others. If it's a very capital intensive industry where you have to put up a lot of money up front to really start the business going and really grow the business, then that may be an industry or a company that might be okay to have a little more debt than other companies. But generally, we like to invest in companies because we tend to focus on more growth companies. We like to invest in companies that have a decent amount more of cash and assets and investments than they do debt, right? So that in that way, they are able to weather a storm if there's a pandemic like we're having right now, or other things come up, right? They're well positioned to grow through that and come out better. And then finally, we look at the cash flow. Obviously, we want to see more cash coming into the company than going out of the company. So once we've already taken a look at the company, we like the company, we think that based on the growth vectors that we see happening and the trends we see happening, we think that the company will benefit from that. And then we've taken a look at their financials, we like their financials, and we like everything about the company. Then we want to look at the stock, right? Then we want to kind of do some technical analysis, see whether the stock is cheap or expensive. We'll take a look at things like the PE ratio and take a look at where the stock has been, do some analyzing of the charts and things like that. And then based on that, we can kind of weigh the risks and rewards and decide whether or not to actually invest in the stock, right? So basically, we want to make sure that if the company is able to execute on their future plans, that will cause the company as well as the stock to appreciate in value, okay? Because even if the company is able to execute on their future plans, if that's already priced into the stock, if we see the PE ratio is way high, or different kind of indicators and things like that are showing us that the stock is already expecting the company to do very well, then it might not be a stock we want to invest in, even if we do think that the company will benefit from these future trends. So that's basically the process that we go through when we're picking stocks. Now, obviously, we get a little bit more in depth than that, but these are kind of the main steps that we go through. So just remember, when you're picking stocks, to make sure that you keep your strategy in mind, whether that be long-term or short-term investing or anything in between. You want to pick stocks that fit your strategy. So we hope this has been helpful, our analysis and our process, but always make sure that you're doing your own research, you're getting your data and your information from a variety of sources, and you're getting a good picture of whatever stock you're looking at. So if you've found this video helpful, please consider liking and subscribing, and don't forget to check out our YouTube channel and our website for more stock information. Have a great day, everybody.